The 2026 budget from the Australian Labor Party has shaken confidence across the property market, and quite rightly so. Investors are asking, should I wait? Should I exit? Is property still worth it? So here is the truth. This is not the time to panic. This is the time to think clearly. Because while policy changes create noise, the fundamentals of property investing have not changed. Hello everyone, I'm Kate Hill, and if you are ready to build real wealth through smart and no-nonsense property decisions, you are in the right place. Let's get on into it. We are going to look at what smart property investors should do now after the 2026 budget. Step number one, understand what has actually changed and what has not. What has changed? Tax treatment on future purchases, investor sentiment, and perceived risk. What has not changed? Australia still has a major housing shortage. Population growth is still strong. Rental demand is still high. Supply is still constrained. These are the drivers of long-term performance. If you are enjoying my content, please hit subscribe. I do share a lot of insights, strategies to help you build long-term wealth through smart property investing. Step two, please promise me, do not make emotional decisions. Policy changes are going to come and go. Supply and demand fundamentals do not. If you've already bought well, there is nothing about your asset that has changed overnight. Step number three, recognize what this does to the rental market. If investor activity slows, then fewer properties enter the rental pool. It's quite straightforward. And at the same time, population growth. Household formation continues. It's decreasing in number, which means that rental demand increases relative to supply and rents are going to go up. Step number four, focus on supply-constrained locations. Look for those areas where land is limited, infrastructure is strong, population growth is consistent, new supply is difficult to deliver. Step number five, be very selective with your new builds. Not every new build is a good investment. There are going to be a lot of spruikers out there. You need a very strong property investment partner like us on your side, advising you independently every step on the way. Focus on the builder quality, the location fundamentals, and the supply pipeline. Step number six, think long-term, always. Property is a long-term asset. The people who win hold quality assets, they ride out the cycles and they stay consistent. Step number seven, do not sit on the sidelines too long. If, as an investor, you hesitate, the supply will tighten, rents increase, competition returns, and those who waited will always buy at a higher price. Step number eight, get strategic, not reactive. Move from, oh, should I buy, to where and what should I buy? What smart investors are doing right now is that they are staying in the market, being more selective, focusing on fundamentals, watching rental demand, and positioning ahead of the next cycle. None of this has changed. They are not panic selling, freezing, chasing headlines. I know it creates uncertainty, but please stay strategic. The bottom line is that the budget has created uncertainty. Uncertainty creates opportunity. Smart investors do not react to policy, they position around it. If you want help navigating this, please let's help you map out your strategy properly. Thank you so much for watching, everyone. If you are serious about building wealth through smart, well-researched property decisions, stick around. There's a lot here to support you and your journey, and I will see you in the next video. Bye.